Let's consider a situation where a client with significant assets is looking for ways to minimize their estate taxes for their heirs. Now, they also have a sizable IRA they're planning to leave to their children. What are some strategies you could employ to minimize the tax burden on their children while maximizing that inheritance?
Let's kind of look at what we can do with assets that we own today. We can move them into a trust, which is getting something out of your estate, and therefore it's owned by an entity that is not your own. And so that's not going to be inheritance taxed or estate taxed when that ultimately becomes available to the next generation. So back to the cash flow question, is there money here that you can afford to not have, for your own incomes and your own needs? Is there money you can afford to not really need to keep in your coffers in case you have a long-term care stay or want to move into a continuous care retirement community? So that's one thing we can do. We can start talking about getting money moved out of an estate. When it comes to the retirement accounts, I think we've really covered that ground pretty well, is that if you have retirement accounts, can you convert that to a Roth, and can you pay taxes at a lower rate than ultimately someone else or even yourself later in life are going to be paying? So that's a way to be able to pass on a more tax efficient asset. And I said earlier, we want to stick a pin in it. I think we want to come back to this conversation about how assets are actually transferred. It depends on how they're owned. And if they have a beneficiary, IRAs are going to go by a beneficiary. Other assets, you mentioned a house. I called it a non-qualified investment, one that isn't a retirement account. They're going to be driven by your estate documents. And so if we can avoid a lot of the operations of making that transfer and make that more smooth, that can save time and cost, as well as just, I think, really making a streamlined, clear plan of getting from here to there. So those are the things you really want to, cover, is how can I pay the least income taxes now? And then you want to have the beneficiary set up in a manner so that when they receive it, now we're talking about what I said earlier about who's in control. So we can avoid costs, we can avoid tax, but I think ultimately we also want to be clear on who's going to be in control, and is that the right person and the right level of control. That's more what estate planning is about. That's not what the social media tells you, though. They're going to talk to you about how to save taxes. It's more important on who's in control. That really is what matters the most when it comes to your estate plan. As you can see, things can get really complicated, and it takes a conversation to find out what's best for your personal situation. We're happy to start a conversation with you. Find us at gootfinancial.com and go to Contact Us, and we're happy to set up a 30-minute call just to learn about your situation and start to answer some of your big questions.